Took forever. What's going on, everyone? Charlie here. We're going to talk about JNL Series Trust. The end game always has been, right? So, JNL Series Trust, what is it? So, Jackson National Life Insurance Company, often referred to as simply Jackson, is a U.S. company that provides annuities for retail investors and fixed income products for institutional investors. Jackson's subsidiaries and affiliates provide specialized asset management and retail brokerage services. They are a subsidiary of the British insurer Prudential plc, or they were, which acquired the company for $608 million in 1986. The company is unrelated to the American insurance conglomerate Prudential Financial, so don't get that confused. So basically what we're looking at here is a merger chart. So basically, Prudential acquired M&G, and they also acquired Jackson. Now, so basically, PLC, the parent company, was M&G and Jackson at one point in time. Then, and this all happened, in the late 80s, Prudential bought Jackson. In the late 90s, they acquired M&G. And then in 2019, PLC demerged from M&G. And then in 2021, in February, after the Jan run-up, they demerged from Jackson. So now these are all three separate entities. And Jackson then buys GME and AMC August 2021. Now, Municipal and General Securities Company Limited launched, which is M&G, they launched the first ever United Kingdom unit trust in 1931, the first British fixed trust. Now, it held the shares of 24 leading companies in a fixed portfolio that was not changed for the fixed lifespan of 20 years. The trust was relaunched as the M&G General Trust and later renamed as the Blue Chip Fund. In March 1999, M&G Investments, which by then was the UK's largest unit trust group, was acquired by Prudential plc. So basically, they created the very first one in the UK, ended up being the largest unit trust investment advisor by the late 1990s. And now in 2021, separate entities, and we're sitting here dealing with Jackson in a unit trust. So you can see here the timing was interesting, right? 1931. My thoughts is that they created it during that time to create basically a safe haven for the securities during the Great Depression time. Just a thought. So which funds of Jackson bought GameStop and which bought AMC? Well, we have JNL Series Trust Small Cap Index Fund. We have the Vanguard U.S. Stock Market Index Fund, which is the only one that's related to both of these. We also have the JNL Mellon MSCI KLD 400. And we also have the JNL Mellon Consumer Discretionary. Now, I want you to pay attention to something real quick. So these A's here and these I's, it's Class I, Class A. So the Class I is what we want to pay attention to. Let's go and take a look. So in common is the JNL Series Trust, JNL Vanguard. That's the one that GameStop and AMC both have. You can see right here in the JNL Series Trust, Vanguard now has GameStop with 7,240 shares. It has AMC with 65,446 shares. Now, this is why it took so long, is because every year, since these trusts are set by time, they swap investors, like they liquidate the old institution's positions, and then they bring in the new ones. So as of right now, this is no longer accurate, which is why I always cross-reference Fintel. They suck. So this is the name as of today. JNL/Mellon U.S. Stock Market Index Fund is what we're going to be discussing. Now, also invested in this trust is every major stock you can think of, And there is a money market fund as well in here for cash collateral. Institutions that this trust lends to specifically, the underwriter for GameStop's offerings this year, State Street Bank, UBS AG London, the underwriter for GameStop, Wells Fargo Securities, Citigroup Global Markets, the book running manager for GameStop and underwriter, Cohen & Company LLC, Credit Suisse Securities, and HSBC Securities. All of these were found. Oh, I'm sorry. And I forget the most important two. BNP Paribas Prime Brokerage International Limited, and then Citadel Securities LLC. All of these are on GameStop and AMC's 13F, so just point that out. So is Jackson a unit investment trust? Well, wait, retard, what's an investment trust? Okay, so UITs, or unit investment trusts, hold a variety of securities, as you just saw. Each UIT may have different investment objectives, strategies, and investment portfolios. They also can be subject to different risks and fees and expenses. Fees reduce returns on fund investments and are an important factor that investments should consider when buying shares. Unlike ETFs, UITs have a maturity date like a certificate of deposit. When they terminate, the trust is liquidated and proceeds are sent back to the unit holders. UITs are not actively managed and serve as a buy and hold strategy and do not actively trade, although positions may be altered in extreme situations, like if an underlying security or an underlying investment goes bankrupt. Why use a UIT? Well, this is where it starts to get tit-jacking. I saved it for the end. So there's two different kinds of trust. There's a stock trust and there's a bond trust. A stock trust generally provide capital appreciation or income from dividends. Sponsors usually issue as many units or shares as needed for a limited time before the primary offering period ends. Equity trusts have a definite termination date. On this date, the sponsor liquidates the trust and distributes the proceeds to unit holders. They will use the net asset value as the basis for distribution. The unit holders may choose to receive the money and spend it as they will. They can also opt to reinvest the proceeds into another UIT. Also, another reason to use the UIT would be for strong growth. In recent years, UITs have grown in popularity due to many reasons. One of them is that most of them have primary investment objectives geared towards providing dividend income. Holy shit. Unit investment trust tax impacts. On top of all this, for the taxation conscious, UITs offer shelter from the unrealized capital gains taxes. Well, holy dookie. Is Jackson a unit investment trust? That is the question. Well, Form 497 from JNL, the separate account from Jackson, filed this year on April 26th, 2021, with this exact fund right here that I just said changed its name to JNL Mellon US Stock Market Index Fund, who also had JNL Goldman Sachs Competitive Advantage. Just look at these names. Goldman Sachs Competitive Advantage Fund, Goldman Sachs Dividend Income and Growth Fund, Goldman Sachs Intrinsic Value Fund, Goldman Sachs Total Yield Fund, all got stuffed into JNL/Mellon US Stock Market Index Fund, which is the fund we're talking about right here. And then at the very bottom of this prospectus, it says right here, JNLNY, separate account 1, is a unit investment trust, as that term is defined in Section 4.2 of the Investment Company Act and is currently registered with the SEC pursuant to that act. So there you have it. It is a UIT. Well, dumbass, what does this all mean? I'm craving something. I know what you're all craving. In essence, JNL Series Trust just added GME and AMC because of 3 likely reasons. Number 1, they expect long-term growth. Number 2, they expect a dividend payout. Number 3, they expect bankruptcy. Well, we all know that bankruptcy is off the table for GameStop, and we all know that, that only leaves 2 left, which are highly bullish. So is this the first precursor to dividend that we see? When was the dividend announced? Maybe they read the prospectus in April. Remember, the dividend hints came out in April. They filed this prospectus in April. Just saying. I am jacked for next week. So yes, JNL is a unit investment trust. This is not going to be an actively managed fund. And this is just 1 out of 6. This is just one we looked into. But anyways, this one here, I'm liking what I see. Bullish. Dividend is coming, or long-term growth is coming. Either way, we all know that these trusts are designed to buy and hold, not short. There you have it.